Hello everyone, my name is Nathaniel Freeman and this is Freeman's Money, and today we're going to be talking about bond yield and interest rates. And I know what you're thinking, that sounds dreadfully boring, but it will explain why a lot of people have lost money in the stock market this week and why people that own blue chip stocks like me have made money this week. Excuse me. Now, we are also going to be talking about mortgages a bit, so I just want to let you guys know, anyone that's new to the channel, my name is Nathaniel Freeman. I'm a mortgage agent with Dominion Lending and I work here in Ontario. So now that we've got that out of the way, let's talk about interest rates and bonds. So, interest rates track the 5-year Canadian bond here in Canada. In the US, they track the Treasury bonds. So, when the bond is, let's just say the bond's existing and the interest rate's 1.5. The reason it's 1.5 is because that's based off the certain amount of people buying it. And if more people buy the bond, the yield goes down. And if more, or a bunch of people pull money out of the bond yield goes up. So think of the bond as they want a certain amount of people owning the bond at one point. Now, to make investors buy the bond, they increase the yield. If there's a ton of people wanting to buy the bond, the yield goes down. So, what happens with mortgages is the mortgage fixed rate interest, or the fixed interest rates on mortgages tracks these 5-year bonds usually. They also track the 10-year, but just for simplicity, we're going to just talk about the 5-year. So they track this 5-year bond. So when the government wants to lower interest rates, they're not just typing some numbers into a computer and being like, this is the interest rate today. Oh, we'll make this the interest rate next week. What they're doing is they're buying bonds, which lowers the amount of yield that bond gives out, and since that yield goes down, that's why the interest rates follow and going down as well. So what we've had over COVID-19 is both the US and Canadian governments buying their 5-year bond, and that's lowered the interest rates quite substantially. Now they're not buying those bonds anymore, the market's starting to recover, so they're not owning as many, which is why the bonds are getting the yields going up, because they're trying to entice more investors. But with that going up, that means interest rates are going up, which means that debt, like if you own a ton of debt, your interest rate is going to go up. And everybody who's an investor knows this, which is why you're seeing a huge decline in tech stocks, innovating stocks, stocks that have taken on a bunch of debt that really don't have the payment history. And like if you take some of the big gas companies, they might have a lot of debt, but they have a history of paying that consistently. Everybody pays their gas bill. But with these new technologies, they're still developing. They're still, like, lower debt helps them because then they borrow more, they can buy more stuff, they can try to invent more, they have a bit more time. But now with the interest rates going up, these companies, they've borrowed a ton of debt and now they're having to pay higher payments, which lowers the evaluation of these companies. Also, those feel that inflation's going to hit pretty hard this month, or at least that's what's going around and people talking. But that's why you're seeing these big technology stocks are taking a good hit this past week, because the amount of debt they've taken on, now they're having to pay higher interest, which is lowering how much the company can put out to other things, and they're having to pay off some of the debt. And that's all part of the accumulation of what's happening with these tech companies. And given that fluctuation, a lot of people are going like, okay, these guys are hedging a bit. We're going to go over to our value-based stocks and we'll just hold them. We'll see what happens with technology stocks, which is why you're seeing that shift. Now, value-based stocks hasn't gone up as much as tech stocks have gone down, but it is that sort of balance. But that's why you're seeing that since interest rates are going up, technology's taking a big hit from those low interest, because everyone thought we would have low interest rates for a lot longer. Since we're not, interest rates are starting to go back up. That's why you're seeing those technology stocks take a big hit this week. Also, you're seeing mortgage prices interest rates on mortgages going up. So it's still pretty cheap. It's still a good time to get a mortgage comparatively. But that is something to keep in mind if you were thinking about refinancing and you're just like, I don't know if I should do it when they were at the lows. Now they're going back up. So they might go back down. They might stay where they are for the next year and a half. I don't have a crystal ball, but they are going up. And the 5-year bond obviously went up, and the treasury bonds in the States, they went up. So that's why you're seeing that interest rate go up. That's why you're seeing those technology stocks take a hit, and value-based stocks are going up. Now, I'm not hitting on people that buy technology stocks. Technology stocks are the future. If you want to make huge, substantial growth, bet on technology stocks, because whichever companies prove to be the most innovative and then come out on top when, like, we're going to have self-driving cars. Not that many current automakers are making self-driving cars. So these new innovative companies are going to be doing that. And when you start to get that shift, that's when they'll become blue chip stocks. They'll become big, heavy companies that they'll be like Ford and Toyota and all these companies. And that's when you'll see people like me start to buy into those value stocks and then getting rid of the old timers. But if you're in those technology stocks, you could see massive booms till they get to the point where, hey, they're the big blue chip company now. And then you can pull out and invest in the next growing. So I'm not ragging on technology stocks at all. I don't have that many right now in my portfolio, and I don't plan on having them for a good long while. But if you're looking for good growth, explosive potential, technology stocks is where it's at. But who knows which companies are going to make it to that final pinnacle and beat out the rest. So, anyways, that's today's video. If you guys learned something, I hope bond yield is a little bit more interesting now. If you're hearing people like, oh, interest rates are going up, interest rates are going up, and you're like, oh wow, they actually went up. These guys are a genius. They're not a genius. They just watched the 5-year bond go up, or they took a random guess, and if you guess 50 times a day, you're bound to be right at one point. But bond yield went up. I got a ton of emails going, fixed interest rates are going up, fixed interest rates are going up. And it was obvious. Everyone knew. It's not like they were being psychic. It's just, well, some people will. Some people knew ahead of time. Won't get into them, but that's how it's easy to tell. If you liked the video, smash the like button, subscribe to the channel. I'll see you guys here next time.